do you want to own things that the government can't print? Because the government's in a situation where they're going to be forced to print a lot of money. The three most obvious things that fall into that bucket are Bitcoin, gold, and silver. Real estate, the government can't print. I think we're in the stage of where it's very important. It's going to go mainstream. And so in this cycle, I see, I fully expect that we're going to 140, 150, 200,000 a coin, within the next 12 months. I mean, I strongly believe that, maybe much higher.
Lawrence Lepard opens with a stark warning. We are in the midst of a full-blown sovereign debt crisis, and the signs are impossible to ignore. Since 2020, financial markets have been flashing red, gold continues to rise, Bitcoin has surged exponentially, and long-term government bonds, particularly U.S. treasuries, are in steep decline. According to Lepard, this is not a temporary market glitch. It marks the end of a deflationary era and the beginning of a long-term inflationary cycle, one that, once set in motion, doesn't easily reverse course. Like and subscribe before Bitcoin hits 1 million and you can't afford YouTube Premium.
I think there's several important things going on in the markets. They're sending us signals, and in particular, the big picture case is that we're in a sovereign debt crisis. And you can see this because since 2020, the price of gold has gone relentlessly up, the price of Bitcoin has gone relentlessly up, and the price of long-term bonds has gone relentlessly down. And so, this is different. We did not see this up until 2020. We were in a deflationary cycle. I think we've turned into an inflationary cycle. And as a result of that, my belief is that, it's going to take some time to cure that, and it's not going to solve itself. And in fact, because of some of the things that are going on, the way the government's behaving, it's going to get worse before it gets better. And I say worse for the long-term bondholders. I mean, the most recent thing that happened last week was the long Japanese government bond, the JGB, the 40-year, kind of went parabolic. It squirted out to an all-time new high. Now they came in and they intervened, they brought it back down. But the point is, it's a signal that more and more people are losing confidence in the ability of all these fiat currency issuers like Japan and the United States and others to maintain the value of their fiat currency. And the reason they can't maintain that value is that they will be forced mathematically into printing more money. And that's because of something called the debt doom loop, which is an entirely different discussion, but we can go into that if you like. So, to me, it's all coming to a head. We're seeing signs that they're trying to figure out ways to get liquidity without printing. There's something called the supplementary leverage ratio, which the banks have. It determines how much treasury debt the banks can hold. They're talking about eliminating it, which is more or less engaging the banks in QE, money printing. We're seeing the Fed recently. There's been some talk that inside the Fed, there's debate about whether to cut rates. We know that Trump has been pushing Powell very hard to cut rates, and Powell's been pushing back because he wants to maintain his reputation as being a sound money guy and looking like Paul Volcker. But my sense is that, things are going to come to a head. I don't know if it's next week or 6 months or 18 months, but they are going to come to a head because, the mathematics of the situation are they've got to continue to print money or else the existing debt structure collapses. So, when it's uncertain, but we kind of know what has to happen. And do you want to own things that the government can't print? Because the government's in a situation where they're going to be forced to print a lot of money. The three most obvious things that fall into that bucket are Bitcoin, gold, and silver. Real estate, the government can't print real estate either, so it falls in there too. But it's I think it's suboptimal because I think it's a little overpriced. I also, it's got real estate taxes associated with it. So in financial asset world, gold, silver, and Bitcoin are the three. It's the troika of what I consider sound money that the government can't print. I think we're in the stage of where it's very important. It's going to go mainstream. And so in this cycle, I see, I fully expect that we're going to 140, 150, 200,000 a coin, within the next 12 months. I mean, I strongly believe that. Maybe much higher. I don't know. I mean, I think whether it's a lot higher or not is partly driven by that earlier macro discussion of whether something breaks and the Fed is forced into a big print. And I'm highly confident that the big print will happen, but I'm less confident in my ability to time it to the month, in a couple of years. But within a couple of years, absolutely, it's got to happen mathematically. But, and when it happens, very much, I mean, if you remember the COVID stimulus, when that came along, that broke gold from 1365 up to 2000, and it broke Bitcoin from 5 or 10,000, it ripped up to 50 quickly. because both of these assets respond to money printing big time. So what we don't know is when the Fed will take the actions it will be forced to take. But when that happens, the prices are going much higher. And looking out longer, I mean, these things are going to be $1 million a coin, then they're going to be 2 million a coin, then someday they'll be 10 million a coin. I mean, I'm with Sailor; it's going up forever, Laura. I mean, the interesting thing. I think a lot of people just don't. It's very hard to get your head around this because most investors kind of think of, well, if it's an asset that goes up and I make a lot of money, I should sell it because it's
Mhm.
going to go back down. And that's in many cases that's true, especially if things get overvalued. But in this particular case, just as with Warren Buffett or Amazon or General Motors or Philip Morris or any great business that lasted a long time, it's not something you ever really want to sell because it's a commodity, but it's a different kind of commodity. In historically, every commodity in the world, whether it be pork bellies or oil or gold or silver, or you name it, if it's a commodity and corn, the price of it goes up a lot. Mankind will figure out how to produce more of it because the seller will make money doing so. So, but here you have a commodity where it really doesn't matter what the price is. There won't be any more of it. There's 21 million units. So, that suggests that the price, so the only release valve is the price. So that suggests the price can just kind of keep going up forever as more and more people come to accept that it is the soundest form of money in the world. And it is because the stock to flow is the lowest, and every 4 years it gets taken down even more. So, I'm extremely bullish about Bitcoin. And the beautiful thing about it is if you're not a financial person, if you just want to live your life, you've now actually got this really great savings technology that you can just kind of buy and forget about. And you'll wake up in 5 years and you'll be richer, and you'll wake up in 10 years, you'll be even richer still. You wake up in 15 years, your kids will be richer. So, it's just kind of it's a beautiful thing. So that's kind of how I view Bitcoin.
This suppression won't last forever. When those bearish bets unwind, especially if paired with over-leveraged long tech positions, margin calls and forced liquidations could trigger the kind of explosive upside Bitcoin is known for. Lepard describes it as a potential, deeply religious experience for short sellers, evoking memories of past God candles that sent BTC soaring 5x in a matter of months.
We're starting to see paper Bitcoin get created. I mean, if a friend of mine who's wise in these matters kind of showed me that it looks like about $30 billion of Bitcoin is moving around every day. Now, some of that may be just transfers, not sales, but most of it, I think, is purchase and sale. And it also looks to me that on Binance, there's roughly 15 billion of Bitcoin futures being traded every day. So, Bitcoin future is not a Bitcoin. You can't take delivery of the future. You're just betting with somebody on the price. So somebody can go to that futures market and say, I'll sell you some Bitcoin that I don't have. And you can buy Bitcoin that guy doesn't have. You're buying a futures contract on the future price, all of which will work unless that guy goes bankrupt. And, so my sense is, and this is partly why Bitcoin tends to have these God candles and move very aggressively. And sure, somebody today can sell Bitcoin thinking, paper Bitcoin thinking, well, it's going to go down. I've been told that there's a very big short paper Bitcoin, long, the triple Qs and the Mag 7, because they've been so heavily correlated. And some managers have a mandate where they have to be long stocks. So they're thinking, okay, I'll be long these stocks, I'll be short Bitcoin. Well, those people are going to get really badly burned because those stocks are overvalued and Bitcoin is undervalued. So they're going to be on the wrong side of both of those trades. And when they have to cover that futures contract, when it starts running and running hard, they're going to have a deeply religious experience, because as you and I both know, I mean, this thing could go from, I mean, it trades like a wild beast. I mean, we saw it go from 10 to 50. We've seen it go from 65 to 15, and then we saw it go from 15 back to 30, back to 58, back to whatever. And so, I mean, we could wake up one day, find out somebody's short Bitcoin and they're blowing up. And that Bitcoin that they're short, they got to get covered, and whatever broker sold it to them, is in trouble. Maybe it's Binance, and Bitcoin's at $180,000. I mean, that could happen. I mean, it's not crazy. I mean, it went up 5x once. So 5x from here. I mean, at 110, I mean, it could go to $500,000. I'm not saying it's going to happen. I'm just saying that this is what we're talking about here. We're talking about something of limited supply. And if there's panic buying, I mean, I know I'm not going to be selling any. Most long-term holders aren't going to be selling any, and so we're going to see we could see some very explosive price moves in this asset. And then the derivatives of that, they're the treasury strategy companies, and they're gold miners, and all kinds of things.
Mhm.
But just at the monetary base, and really the big story is that the monetary system, is failing because of Keynesianism run wild, and there's too many years of bad behavior on the part of the government. I mean, we're running a 6 or 7% of GDP federal deficit right now, and theoretically the economy is healthy. So imagine what happens if we have a downturn in the economy. Not saying it was going to happen, but Lacey Hunt just said he thinks there's a 50% chance it'll happen. This all points to what my friend and brilliant analyst Lynn Alden says, which is, nothing stops this train. I mean, they've
Mhm.
kind of got a monetary system that's out of control. And, okay, so that, what do you do with that? What you do with that is you own forms of money that they can't control and that will hold their value against all the money they're going to have to print.
At the heart of it all lies a simple, devastating truth. The fiat monetary system is broken. Years of unchecked Keynesianism, reckless fiscal policy, and central banks papering over structural problems have led to a crisis of confidence in money itself. The US government is now running a 6.7% of GDP deficit without a declared recession. You've made it this far. Now go deeper. Click that video.